Hey, good afternoon. George Cavaligos for HFT Bonds. Lots of interesting things going on. Not a lot of volume today. It's Friday, holidays, I guess. 586,000 10-years right now. What about 245? That's not great. The other thing I was just looking at was the weekly charts. The 10-year this week had a 27-tick range, and the bonds had a 1.7-tick range. That's against the average true range measurement, which is that moving average, I guess, of the previous week's ranges. The most recent average true range on the weekly bond chart is 4 points, and the most recent average true range on the weekly 10-year chart is 1 3/4 points. So we have some very narrow weekly ranges. You look at those weekly ranges, they're obviously inside range weeks, which are minor trend change indicators. So maybe we could see something building here. Maybe it's a base. The short-term wave counts still look somewhat negative, like we need one more lower low. The daily charts, though, on the bonds, it's a bullish engulfing pattern on the daily chart, and we have a doji at the moment in the 10-year note. That's a possible trend change indicator. So next week we have an onslaught. I think obviously it's the week before Christmas. There is a massive amount of economic data, not just here in the States, but also out of Asia and Europe. There's also a Fed meeting. There's also a series of auctions next week, 2-year, 5-year, and 7-year. And I believe Wednesday is the 5-year and the 5-year tips. Personally, I can't ever remember a day where we had 2 coupon auctions in the same day, but who knows? My memory's going. I'm getting old. But it's going to be tough for the market, I think, to take those kind of numbers down, especially with this curve flattening that we're seeing going on. People are a bit reluctant, I think, to step up and buy the short end since they already owned a lot of it and are probably getting nervous with Mr. Fisher coming on to the Fed and his whole dislike of forward guidance. Took away that little forward guidance put for the 2-year note holders. So what are we going to do? Well, we're going to look at the market. We're going to see the recent ranges. If you look at the 10-year, we've been between 124.03 and 124.20 roughly all week, with not a lot of good directional signals at this point. I think you look for, at least on a short-term basis, if we take out 124.03, we could see a retest of those recent lows down at 123.23. And on the upside here, I think if we can start trading above the 124.17 level, we're going back up to 124.30 and retesting that high again. So just trading these ranges, stay nimble. I'm hoping what the very narrow weekly ranges and very low weekly volume is not just a holiday coming. I hope the market is consolidating and coming to a point where we're going to get some kind of a breakout, hopefully a trend. Oh Lord, for a trend. Have a great weekend, everybody. I'll see you Monday morning in the chat room and in the email.